Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, co-founder of LikeFolio. Welcome back to the show, Andy.
Hey, thank you for having me.
All right, so we're talking Tesla once again. Every quarter we're talking this name. Price target cuts across the board. Is this reflective of lower demand according to your data, or is it just the fact that nobody's buying cars at this point, or they're moving away from Tesla because they don't like Elon Musk? What's your data showing you?
Yeah, there's a lot of theories out there as to why this company cut prices. I will say, I think that the timing of the price cut is probably reflective of the overall economy, and especially the automotive economy. But really, when we look at Tesla, we see a company that's still driving from a position of strength. And we do think that these price cuts have had an extraordinary impact on demand for Tesla vehicles that will give the company something really positive, we think, to talk about going into this call. So, overall, electric vehicle demand, if we just look at the big trends, electric vehicle demand continues to grow at a rapid pace, up over 100% on a year-over-year basis. People are looking for high-tech cars, autonomous vehicles, and they're still concerned, even though gas prices are down from last summer's highs. There is still concern around that we think could possibly surge back up as we get into the spring and summer months again in 2023. It's really with Tesla, it's about consumer demand. When we look across all of the models that Tesla offers, we see almost all of them experiencing year-over-year growth, some very, very substantial. And especially when we zoom in on the Model 3, which I think is really their market share capture kind of vehicle, their entry point vehicle, base price around $54,000 now after these price cuts. If we look at the current quarter pace for sales or for demand of Model 3 vehicles, that bar on the far right, the kind of lightly shaded ones, the pace of the current quarter, it's really, really starting to boom like we haven't seen since the pandemic. So I think overall Tesla's in a position of strength, although the entire automotive market is in a position of weakness. And so this is a company that's fighting a significant headwind, but doing a very, very good job of it from a consumer demand generation perspective.
Andy, I'm going to make a couple statements. You tell me where I'm dead wrong here, and that I see it differently than the rest of the world. Ready? I think Elon Musk lowered the prices, and everyone reported he's lowering prices because demand is so low. He lowered prices below $55,000 so consumers could get the $7,500 tax break, thus turbocharging demand. So whatever he reports for the Q4, he's going to be able to say that sales are skyrocketing for Q1, and as stocks look forward, he's going to have a great story coming out of this earnings report. Tell me where I'm wrong there.
No, I don't think you're wrong at all. I think the other thing that Tesla can claim is that they're the only electric vehicle manufacturer that's really figured things out at significant scale, and that scaling is getting better and more efficient. So I think the company can afford to cut prices. Yes, it will have, clearly anytime you cut prices that significantly, there is a margin per unit impact. But I actually think Tesla can come out and say, look, we think because of the efficiencies that we're getting, we think we'll be able to stay around the same profit margin on a 18-month, 24-month basis. And what we're doing here, if I'm Tesla, I think it's the smart thing to do. We're looking at a sector, electric vehicles represent something like 4 or 5% of total vehicle sales right now, I believe, last I checked. That's going to 25, 30, even 50% over the next 5 to 10 years. So do I really worry about my profit margin per unit in 2023? Or do I think about continuing to capture 80+% of this massively growing market over the next 5 to 10 years? I think based on what Elon Musk has done in the past and the way Tesla's had a visionary approach to things in the past, that it's the latter, and they're going for the whole pie, and that pie is rapidly growing. So I think long term, it's the smart play.
And Andy, when you compare data and happiness, to some of the competitors, because I think part of, to Kevin's point, the price target cuts, right? The tax credit bonus that you get by lowering the prices below that threshold that you need. But at the same time, the upcoming added competitive pressures that are going to be on Tesla moving forward, when you've got all these other automakers that are coming out with these new EVs, these new models that are all electric, GM, Ford, you look at Volkswagen, you look at BMW, Mercedes. Is that also in your data where they're also doing it to head off competition that's coming really quickly?
Yeah, absolutely. I think this is the first time that Tesla has faced competent competition really in its entire existence, which I think is great for the consumer. It's probably good for Tesla long term. And from a consumer happiness perspective, we really see Tesla right up there with the best of them. The loyalty looks very, very high. People returning to buy from the same brand. I think I saw a stat the other day that there were only 2 or 3 automakers where loyalty was high enough that the consumer was most likely to buy that exact same brand again when they went back to the trough for another car. And Tesla was in that 2 or 3, and all the other auto manufacturers, people were looking for something different. So I think that speaks to the quality that Tesla has finally been able to achieve after a really long time of struggling to maintain scale and quality.
And going into this report, I mean, based on that data, you got the ramp up in Model 3, data that you had, electric vehicle demand, gas prices actually ticking back up the last couple of weeks here. What type of earnings score do you have on this one going into the report?
So we're actually pretty neutral on it. We think the stock is priced about right. I would say this is a don't bet against Elon Musk too heavily type of, if you have a bearish thesis, that's fine. I get it. There's a lot of headwinds, but you've got to be risk defined if you're going to do that, because we've seen this stock squeeze higher so many times that it's a tough road to be betting against Elon Musk without upside protection.
Yeah, definitely of the possibility of some wild swings in this stock based on that report, and probably the conference call too. All right, thanks, Andy. Appreciate it.
All right, thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down the data on Tesla.